Hello everyone. It is no secret that the yield on the 10-year US Treasury note has been highly volatile since early November. Mr. Trump's victory and his likely inflationary policies pushed it towards its May highs of 4.5%. And then the resurgence of geopolitical tensions has given it a breath of fresh air, but volatility is certain to remain the order of the day. So US Treasuries are considered to be the safest and most liquid risk-free investment, despite the loss of their AAA rating by two of the three main rating agencies. In recent months, a new challenger, despite its lower rating of A+, has slipped ahead of the United States. It's China. Its debt is much less liquid, which remains a key factor, but it now pays less than the debt of the United States, much less. The China bond issued 5 years ago, 1.25 maturity 26, was issued with a risk premium of 12 basis points, and it's been trading with a negative premium since April this year. More recently, on November 12, China issued $2 bonds. It was aiming for a 2 billion issue, and it obtained order books of 40 billion, 20 times more. The risk premium offered at first was already low, but it melted further in the face of the success. So we started at 25 to 30 basis points and then to 1 and 3 basis points for the 3 and 5 year maturity. The craze continued after the issue, and on November 20, the 5-year bond was trading at a premium of minus 32 basis points. Never seen before. By a way of comparison, if we take a US dollar Canadian bond AAA rating with the same maturity, it is trading at plus 3 basis points. Beyond these impressive figures, there are other factors worth noting. China has no specific funding needs in dollars, so why is it borrowing in this currency? One likely reason is to create a reference curve for local companies wishing to issue in dollars. Chinese demand has been strong because these bonds offer them tax advantages. But in addition to this expected local demand, there was another slightly more surprising demand from Saudi investors. In May this year, Chinese and Saudi finance ministers met, and they expressed the wish to strengthen their financial and economic collaboration. And this was far from being a pious hope, as China chose to issue these dollar bonds from Riyadh, thereby supporting Saudi Arabia in the development of its financial hub. The dreams of the supporters of a de-dollarization who advocated the creation of Petro One in 2022 may not have materialized, but the two countries are continuing to develop their ties. Finally, it should be noted that 12% of the 5-year maturity has been allocated to the Middle East. This compares with 15 to Europe and only 6, which is half, for the United States. Also, in the third quarter, Chinese funds have sold $51 billion of US Treasuries out of the 700 billion they held. So ties continue to grow closer between the Middle East and China, creating new balances to keep in mind. Thank you.